Imagine a world where everyone understands money, not just how to spend it, but how to make it work for them. That's the world the rich live in. It's a world where financial education is as important as academic education, if not more. A world where understanding the value of a dollar goes beyond just knowing how many gumballs it can buy. Now you might be thinking, I've been to school, I know math, isn't that enough? Well, not quite. You see, financial education isn't just about being able to crunch numbers. It's about understanding the concepts that drive the economy, like investing, taxes, and entrepreneurship. It's about knowing how to navigate the financial landscape to maximize your wealth. Let's take investing, for instance. It's not just about buying low and selling high. It's understanding market trends, recognizing opportunities, and making informed decisions. It's about knowing that a stock isn't just a piece of paper, but a share in a company and its future. Then there's taxes. Now, nobody likes paying taxes, right? But understanding them, knowing how they work, can be the difference between keeping more of your hard-earned money and giving it away. The rich understand this. They know how to use tax laws to their advantage to keep more of what they earn. And let's not forget entrepreneurship. It's not just about starting a business. It's about seeing a need, finding a solution, and making money from it. It's about innovation, risk-taking, and creating value. The rich understand this too. They know that entrepreneurship is a path to wealth creation. So you see, financial education is more than just knowing how to add and subtract. It's about understanding money, how it works, and how to make it work for you. It's a common trait among the rich, a secret ingredient in their recipe for wealth. The rich know that wealth isn't about how much you earn, but how much you keep. And that, my friends, is the power of financial education. Albert Einstein once called compound interest the eighth wonder of the world. The rich teach their kids to harness this power. Let's demystify this eighth wonder. Imagine a snowball rolling down a hill. As it rolls, it gathers more snow, growing larger and faster with each roll. That's exactly how compound interest works. It's the snowball effect for your money. Here's how it works. Compound interest is the interest you earn not just on your initial investment, but also on the interest that your investment has already generated. It's interest on interest, and it can turn small, regular investments into a significant sum over time. Consider this. Say you start with $100 and it grows by 10% each year. After the first year, you'll have $110. Now, in the second year, you earn interest on the full $110, not just the initial $100. So, at the end of the second year, you have $121, not just $120. This might not seem like a big deal with small amounts or over short periods, but let's extend this over 30 years. If you were to save just $50 a month at a 6% annual interest rate, you'd have invested $18,000 by the end of 30 years. But thanks to compound interest, your savings would have grown to over $50,000. That's almost 3 times your original investment. Now, imagine if you increased your monthly savings or found an investment with a higher interest rate. The potential growth is astounding. It's important to note that compound interest is a long-term game. The real magic happens when you give your money time to grow. And that's why the rich teach their kids to start investing early. The rich understand that the earlier you start investing, the more time your money has to grow. The rich don't work for money. Their money works for them. They achieve this through asset building. Now, you might be asking, what exactly is asset building? Well, it's the process of acquiring assets that generate income. This is a fundamental shift from the typical mindset of working for a salary. The rich understand that their time is valuable, and they can't scale their wealth by merely trading time for money. Consider this. If you work for a salary, there's a limit to how much you can earn. There are only so many hours in a day, right? But with assets, the earning potential is limitless. Your assets work around the clock, creating income whether you're sleeping, on vacation, or spending quality time with your family. Let's delve a bit deeper into some examples of assets. Real estate is a classic one. Buying property and renting it out can provide a steady stream of income. And the beautiful part? The property can appreciate over time, potentially increasing your wealth even further. Then there's the stock market. When you buy shares in a company, you're essentially buying a piece of that company's future profits. As the company grows, the value of your shares could increase. Plus, some companies even pay dividends, which is like getting a small paycheck just for owning the stock. And of course, there's the option of starting your own business. This requires a lot of work up front, but once it's up and running, it can become a significant income-generating asset. The key takeaway here is that building assets is about creating sources of income that don't require your constant time and effort. It's about making your money work for you. This is the art of asset building, and it's a crucial lesson the rich teach their kids. Remember, it's not enough to just earn money and save it. That's important, sure, but it's only part of the equation. To truly build wealth, you need to focus on acquiring assets. The rich teach their kids to build assets, not just bank balances. The rich don't just aim for wealth, they aim for financial independence, and they teach their kids to do the same. So what does financial independence mean? It's a state where you have enough income from your assets to cover your living expenses. It's about having your money work for you, instead of you working for your money. It's a mindset that embraces the idea of passive income over active income, of investments over jobs. Imagine it like this. You are in a boat in the middle of the ocean. Your job is the paddle that helps you move forward. But with financial independence, you're not just paddling. Instead, you have a powerful motorboat, and that motor is your income-generating assets. These assets could be anything that brings you regular income without requiring your constant attention or effort. It could be real estate properties, stocks, bonds, or even a business that runs smoothly without your daily involvement. The rich understand this concept and use it to their advantage. The key here is not to rely solely on a job for money. Jobs can be unpredictable. They can disappear. Companies can go under. Industries can change. But if you have income-generating assets, you have a safety net. You have something that keeps the money flowing, even when the job market is tough. This doesn't mean you should quit your job right now and start investing everything you have. It's about understanding the difference between active and passive income and gradually building up your passive income streams. It's about planning for the future, for a time when you might not be able or want to work as much as you do now. The rich strive to create a life where work is a choice, not a necessity. They aim for a life where they can spend their time doing what they love, without worrying about making ends meet. They aim for financial independence, and they teach their kids to do the same. Knowledge is power, but only when applied. The rich don't just teach their kids about money, they encourage them to put what they've learned into practice. Indeed, it's one thing to understand the concepts of compound interest, asset building, and financial independence. However, it's quite another to actually put these theories into action. The wealthy understand this distinction, and they urge their children to not simply learn about money, but to use this knowledge in their everyday lives. Think about it. It's not enough to just be a passive observer in the world of finance. To truly grasp the power of money, one must actively participate. This is why the affluent encourage their kids to start their own businesses. It's not just about potentially making a profit. It's about learning the ins and outs of running a company, understanding the risks and rewards, and growing from the experience. Similarly, the rich encourage their offspring to invest in stocks. Again, it's not just about the potential financial gain. It's about understanding the market, studying trends, making informed decisions, and learning from the inevitable mistakes. It's about developing the ability to think critically and make sound financial judgments. And let's not forget about real estate. The wealthy often push their children to buy property, and not just for the sake of owning a home. Real estate investment can provide a steady income stream, serve as a hedge against inflation, and offer tax advantages. But more than that, it's a practical way to learn about the complexities of the real estate market, the importance of location, and the benefits of long-term investment strategies. It's about gaining hands-on experience and learning to navigate the intricacies of financial management. The rich know that the best way to learn is by doing. They encourage their kids to take action, to make mistakes, and to learn from them. After all, experience is the best teacher. And in the world of finance, there's no substitute for practical, hands-on experience. It's the key to truly understanding money, and it's the path to wealth.